Hey, how's it going? So, I'm gonna be talking about The Guide to Investing by Robert Kiyosaki. And just as a disclaimer, I'm definitely gonna be leaving a lot of stuff out from the book, and I'm just gonna talk about some important stuff that I think is important, crucial in the whole idea of this book, because the whole book is like 500 pages. So, there's a lot of information in it, and it's very, very, very detailed for a person who really wants to explore the world of investing. It speaks about so many different things, about how you can start investing with nothing, how to raise capital, the different types of investors. So he speaks about there being different types of investors. And all right, so we can just start there. So the world of investing has five different players, five different types of investors. So this is when we consider that uh, there are different types of investments and different vehicles to invest in. So you have different types of investors. So the different barriers of investors are determined by what you want to accomplish as an investor. So the first step to investing and to the guide to investing is to know what you want as an investor, to really, because you have a choice. You can choose to be a slow investor, a fast investor. You want to make money quick, you want to get rich quick, so there are all of these different aspects that you have to consider. But like getting rich quick is usually a scam type of thing, because true wealth is built over time. So in this book, it speaks about the different types of investors and how, first of all, you have to choose what you want. So the first rule is to have an investment plan. So when you have an investment plan, it means that whatever you decide is going to be determined by how you implement the plan. So if your plan is to invest 20,000 and double it every year, then it means that you have to follow a certain type of system and a certain type of regime. And if you do this systematically over a long period of time, then eventually you'll make the money that you want. So it's about how you retain the money that you have and how you keep on growing it, as opposed to just how you make money. So the whole book starts with the story of the Pareto principle, or the law of least effort, which is the 80-20 rule. It has a lot of names. So the Pareto principle talks about how a person starts off with anything. Like, you can start off with anything, but when you're doing something, you're gonna see that 80% of your results will come from 20% of your efforts. So this is just a law of nature that says that in all of your efforts, there are a few crucial things that are more important than the rest. So instead of the 80-20, he puts it as 90-10, which says that 10% of the population control 90% of all of the money, which is how it actually is. So the whole book, the entire book, is about this principle and about this concept. So this is the beginning part of the book, and he goes on to explain how you have to first develop your mind into a wealth, like to have a growth mindset, into a wealth generator. This is what you have to do. So you have to be able to cultivate your mind, to cultivate your ideas. So it all starts in the mind. So when I was first reading this book, I read it a couple of times, and I read it a couple of years before. And I used to get this impression that, wow, this has the think and grow rich type of vibe in the beginning chapters of the book. But as you go deeper into the book, you see that it has so much detail, more than the Napoleon Hill book, because in this book he is just explaining about how your mind is really the vehicle that you need in order to invest in. So the investment part is about how it's not about what you say, it's about what you whisper to yourself. This is an important aspect that he puts it as saying that what you're saying to yourself is what your future is going to be. So some of the things that you see in terms of what they call law of attraction, what they call magnetism, This is true because what you say in your mind is very important. So your mind begins your habits. Your mind gives you your thoughts, which gives you your words, which gives you your habits, your actions, and your thoughts and your destiny. So this chain reaction is very, very true. So it all starts with your mind and how you harness the information, especially that you're looking for in terms of what you want to invest in. So when you have this information, you have to put it into a plan. So this plan is how you actually get to your result. So investment is all about having a plan. So when you have a plan, you already have a way that you're gonna get to where you want to be. So this is the important aspect of it. That when you have an investment plan, you have to stick with it. You have to develop discipline to stick with it, even if it's boring or if it just seems like, all right, you only get one good investment a day or whatever. So this is what you have to do. So the most important thing that you have to invest in is not to invest in a business, it's not to invest in a product, but is to invest in your time. So like you taking the time to watch this or to listen to this, you are actually investing your time into this. So when you're just investing your time into specific things that you want, because investing is tricky to most people because there are so many things that you can invest in. There's so many subdivisions through investing, and in this book he goes into so many minute details which explain, like for example, if you want to invest in real estate, you're gonna have to choose between or among so many different choices. Like, are you gonna invest in single housing homes? Are you gonna invest in commercial properties? Are you gonna invest in apartment buildings? And how are you gonna finance it? So all of these things are very important, and it's very, very systematic in how you approach this. So at the end of the day, the investment practice is not risky at all. What is risky is the lack of information, and what is risky is the actual investor if you're going to hand over your money to someone to invest for you. So in order for you to control your invest, you have to limit your risk by by being as hands off as possible and letting the investment work itself out. So you have to create like an automatic process, and when you're doing this, you're investing more money with less risk and with less worry, because what you want to do is to be able to let it just be unfolding on its own. So in this book he actually speaks about how the he actually speaks he puts it in this way, like the secret to finance and the secret to wealth is being lazy. So I didn't see that one coming because I know that the hardest thing to be, like, if you want to be rich, the hardest thing for you to be rich and have a habit of is the habit of laziness. Like, it's so hard for you to be rich if you're lazy. So he says that the secret of wealth is being lazy, because he says that the more hands off you are in your investments, the more cash flow that you have. So a lot of people want to fidget with the little details, but at the same time, while they're fiddling, they're not optimizing what their return could be if they just step back a little bit. So this is an important aspect that he says is the secret to investing and the secret to wealth. So the whole book is about how you leverage your mind and how you use your mind in order to get a certain result through your investments. So the book starts off as a mental template, a mental blueprint, and all of these things. And this is how it actually starts. And then as it develops, it speaks about the different types of investors. So there are 5 different types of investors. So the first type of investor that we have is qualified is an accredited investor. So this is an investor with a certain capital base. So if you have a certain capital base according to the laws in your country, so this could be someone who has, let's say, $300,000 of disposable income, and this type of investor will go to their broker and give the broker their money, and then they do what they do, and then they make money or lose money. And then the second type is a qualified investor. A qualified investor is somebody who has knowledge of technical analysis and fundamental analysis. So this could be a person who is like a stockbroker or a stock trader. So this type of person is able to use their understanding of the financial markets in order to make money. And the third type of investor is a sophisticated investor. And a sophisticated investor checks all of the boxes of an accredited investor and qualified investor. But what his edge is that he understands investing, and he also has the understanding of investment laws, banking laws, and all of these things like that. So then he's more fluid in how he preserves money. And this type of person, a sophisticated investor, is a type of person who can make money by reducing taxes and things like that. So an accredited investor doesn't have that expertise, nor does a qualified investor in terms of this breakdown. And the fourth type of investor is what we call an inside investor. So an inside investor is a person who builds the investment vehicle. He builds the investment. So this is a type of person who like builds a company, or another type of person who builds a derivative, or a person who just builds any other financial instrument or something like that. So this type of person could be a person who makes the contract. So this will be the investment vehicle or the contract and all of these things. So this is an inside investor. And the fifth and the final type of investor is the ultimate investor, who basically brings all of these investors into one pot. But what an ultimate investor is a person who is a selling shareholder, because how Bill Gates made money was through selling his shares of Microsoft. And this is the ultimate investor and the ultimate goal. So as the book progresses, he's talking about his conversations with his rich dad and the stark difference with his poor dad. And sometimes I feel sorry for the poor dad, because it seemed like he was a victim of circumstance. I don't know why he wasn't able to change his mind, but I guess it speaks to the fact that the mind is the soil where all of the seeds are going to be planted. So it was going to be up to the poor dad to make those types of decisions. But he's talking about his rich dad, and some of the times I was like, wow. But then some of the times, like, all right, I guess repetition is key. But some of the statements are like, wow, like, all right, I've already heard that, and he says the same thing over and over again. Like, you flip the page, and rich dad says it again. Rich dad says it again. Rich dad says it again. So I got that notion that he was sort of like reminiscing, because his financial education started at 9, so it was like him recalling. It's like up on Melancholy Hill. So there's a plastic tree. So it's like I got that type of impression. Like, it's a bit melancholic sometimes how he is recalling this, a bit reminiscent, which is cool, but which is a bit repetitive. So you have to be prepared for that in this big book. And he's talking about how his rich dad was able to make certain mistakes, and through these mistakes he was able to leverage them into knowledge. So some of the greatest failures are people who've never failed. And this is something that I learned in this book, that it is good to make failures. It is good to fail, because once you're able to be an ultimate investor, once you're able to create your own business as an inside investor, you'll see that first thing is you don't need money in order to make money. And the second thing is, the more that you're free, or the more that you're liberated from the drudgery of being in the cash flow quadrant where you have to work for earned income, the more that you're free from that is the more that you're able to develop something on your own. So in the book, he speaks about how Thomas Edison probably wouldn't have created the light bulb if he was employed in the country that he started. So if he was an employee at General Electric, probably he would have been fired for making 10,000 mistakes. Come on. So this is one advantage of being a person who's an inside investor and ultimately the ultimate investor. So it doesn't take money in order to make money. What it takes to make money. What do you think it takes to make money? So in this book, he speaks about what it takes to make money. So he'd say that, all right, education is what it takes to make money, maybe. But what it says it takes to make money. So you could have your opinion on this one. If you believe something is important in order to make money, what do you like instinctively think the most important thing is? And what he says is that the most important thing that you need in order to make money are your words. It doesn't take money to make money, it takes words to make money. So your words are going to be very important, and they're the basis of everything that he's speaking about in this book. So the words are how you are able to explain things to yourself. It's not about what you say, it's about what you whisper to yourself, because the things that you say to yourself are the real things that you really believe. So the words that you get through financial education are very important. So he was also speaking about the importance of financial education. So financial education as opposed to academic education, because all of the schools today are teaching people to be employees as opposed to business owners, as opposed to investors. And an investor is the only person who's able to say that, all right, no, I want my salary to be $100 million a year. You can say that as an investor. You can't say that as an employee in a company. You can't say that as a sole proprietor. So it's all about how you are able to understand the words that are surrounding us. So the words are very, very important. And through this, you're able to see so many different avenues that will lead you towards your financial freedom. So in the guide to investing, he's speaking about all of this and more. So the crux of this book, the most important aspect of this book, as I saw it, was the riddle. So there's a riddle in the book which is called the 90-10 riddle. So the riddle goes like this: how can you put more assets in your asset column without spending money to acquire more assets, to acquire those assets? So how can you put assets in your asset column without spending money? How can you make money without money? How can you create money? So he's talking about the issue of investing money or inventing money. So you have to create this money, and the only way to do this is to create an asset. So to create an asset is, there we go again, we're talking about the mindset and the words. So to create an asset is what every rich person has done. Bill Gates created Microsoft computers. So here is the thing. Bill Gates did not actually invent everything to do with the software that he licensed to IBM. What he did is he went to Canada and bought this software from someone else who had already developed it, and then he bought it, and then he created that as an asset, as Windows. So you do not need to have an original idea. You do not need to have the best idea to invent an idea. What you need to have is a better idea, a better alternative, because Jeff Bezos took the Walmart idea and put it on the internet. So he just did it better. So it's all about innovation instead of invention. So if you're able to create an asset, this is just your mental faculty that is at work. Henry Ford said that it is the hardest work there is thinking. Thinking is the hardest work there is. Thinking is the hardest work there is. That's why so few people do it. Albert Einstein said that knowledge can take you from A to Z, but imagination can take you anywhere. So imagination is more important than knowledge, and this is how you begin to create. So this is the basis of this book. That is the golden nugget that I found while I was reading this book, that the whole point of investing is to be able to get assets without purchasing them with money. Or in other words, you're supposed to be able to leverage these assets. So the issue of leverage is the way of doing more and more with less and less. All right, so this is how you actually do invent your money. So when you have this idea of everything being passing away, like how you can use less things to do more and to impact many with less and less. So this ties in with his book on leverage, which is Retire Young and Retire Rich. And if you haven't seen that one, you should really look at it because it has some really cool ideas. And I really like Retire Young and Retire Rich. In fact, I like all of his books. So in this one, he's speaking about this very, very crucial aspect of how you can make assets, create assets. So this is just about how you think about things. And in this book, I got such a strong impression that he was nudging everybody who's reading this book to focus on the internet and how the internet is going to change everything. So here we're talking about Jeff Bezos, and I just mentioned Bill Gates, and all of these people were people who innovated through the internet. And you can look at Mark Zuckerberg, and you can look at all of these people. So, all right, there's a technology benefit that we have, because I also mentioned Henry Ford, who benefited from the technology that he used to mass produce cars. So you should be able to understand that the internet is the biggest innovation tool that is there for everybody to access. So through the internet, this is where the investment guide is pointing to. That you could do whatever you want, you can learn whatever you want, you can get the information that you want, because financial liberation and financial freedom is all about your words and all about what you learn. So you can teach yourself what you want now, and you should just know that it's not about investing in a product, a company, or whatever. It's about investing in your time. So thank you for watching this video, because I know that through investing your time in this, you are also investing in yourself. So through investing your time, you are getting richer. So richness, wealth, and well-being, all of that, it's not just dollar value. It is what you become. So thanks a lot for watching this, and just know that you need 3 E's. So he speaks about 3 E's. So there's education, there's experience, and there's excess cash. So when you have these 3 E's, then you have what you need in order to move forward and start making that big money. So in all of this, you're supposed to be able to give back to society and to whoever is there in order to fulfill everything that you think is right in this world. So it's very, very important to be able to give back, and this is one of the things that is emphasized at the end of this book. So again, I really want to thank you for watching this, and I wish you all of the best in your investment, and just watch some other cool stuff. Thanks a lot, and many blessings to you.